Welcome to the Lazy Equity Podcast, where we talk no fluff, just bricks and bucks. Today at the Lazy Equity Podcast, we've got a mate of mine, Mike Mortlock, a long-time friend of ours in the business and personally. And Mike is from MCGQS, Quantity Surveyors. He's going to be talking to us all about the current affairs of the property market and sort of where we're sitting at the moment. Mark, thanks very much for joining us, mate.
It's a pleasure. Thanks for having me.
Always a pleasure, buddy.
I've got studio envy. Look at this place. This is great.
Yeah, now we've got to move.
Oh, okay.
Yeah, so
Bigger and better.
Bigger and better. I don't think the next studio is going to be as glam as this one.
It's a bit like Zach Galifianakis between two ferns.
I like it. Yeah, we're going for that. A little bit of less harassment, I think, though, yeah. So,
I can take it. Just up to you. It's your show.
Let's go. I mean, we'll see where we go. Let's take it there. You ready?
Yeah, I'm ready.
Let's go. All right, Mike. So, look, we want to chat about all the current affairs at the moment that's sort of boiling up in the property market. We've got the recent elections that have just come forward and been decided. We've got Trump's tariff laws and his whole impacts there. We've got a whole bunch of other interesting, gnarly topics that we can talk about. Interest rates continue to hopefully drop. So let's tackle on a couple of those, as well as going into your data reports that are now monthly available, or rather available monthly on your guys' website. Cool. Where do you want to start?
Gosh. Well, why don't we start with the election?
Let's go.
Labor won. Or maybe it's more appropriate to say Liberal lost.
Yes.
Because, I mean, you think about the top three sort of parties in Australia, the Labor, Liberal and Greens, 2 out of 3 lost their leader. Like, that's pretty crazy stuff.
Yeah.
Not unprecedented, but it kind of shows that there's a lot of kind of malcontent in the electorate, right?
I just feel like, you know, every policy that's put in place is only put in place until the next election arrives. And then there's a bit of a knee-jerk reaction to do something to make things happen.
Yes.
And I don't know, I just feel like whatever we do head towards or put our balance sheets on or put our wages on to make, you know, hopefully the right decision to vote for that party, it doesn't really matter anymore. However, with that said, there's still stamp duty potentials.
Yeah. They could cause a lot of pain in 3 years. Anybody could, right?
Yeah.
But I take your point. I think you think about some of the projects in Australia, like Snowy Hydro, like these are massive nation-building things that they last longer than that term of government.
Yes.
But it's kind of this vision for the future, vision for Australia. But we seem to be stuck on this 3-year cycle. And, you know, even things like the fuel excise at the last election, it was like, we're going to, you know, reduce the fuel excise for 6 months, and that's going to expire roughly when we think we're going to lose the election, and then the other guys can deal with it. It's that sort of stuff.
Just
I don't think
Band-Aids.
that's good.
It's not even Band-Aids. It's promises that, you know, they might have good intent, but will they ever eventuate? Because like you said, the time's just not there.
Yeah.
So yes, a project takes a hell of a long time to complete, and all these promises only last 4 years.
Yeah.
So what's the point?
Yeah.
Yeah.
But you talked about Trump, maybe it was off air, but the Trump stuff fed into the Australian election. I refuse to believe otherwise, because at the beginning of the campaign, Dutton was wearing red hats. With, you know, Trump was getting rid of all the public servants with Musk, and that was policies that the Liberal Party brought to the election.
Yeah.
You know, basically just putting the broom through the public service. And then people were like, oh, that doesn't sound good. And then I think one of the Libs sort of said, well, like the national public servants don't do anything with schools or hospitals, right? Because it's state. And then everyone's like, oh, yeah, I can get behind that. Yeah, just don't take it from the schools or the hospitals. Yeah. But I think that was obviously predated the Trump tariffs. And then when Trump went down the tariff route and all of our super balances went in the toilet and
Good observation.
Global equities were in turmoil, I think that's when Dutton quickly tried to go like, oh, yeah, I'm not even mates with him. And Trump even helped with that, because he said, like, you know, congratulations to Albo. You know, he's always been a great friend. I don't know who the other guy was.
Yeah, I saw that.
That was great.
That's a little bit undermining, isn't it?
Yeah. He wants to be on the winning team.
He does. He always does. Good old Trump. What are your actual feelings on his decision impacting the Australian property market? Do you have any sort of conceptions around
Well,
that?
it's going to affect the market through the funnel of the global economy, right? Like it doesn't directly impact the property market, but it could definitely directly impact our exports, the price of our imports, the economy in general.
Yeah.
So it'll feed in somewhere somehow, but it's so up in the air. I mean, China and the US have agreed to almost like a trade ceasefire where they're not going like 145% tariffs, which is mad, isn't it?
But that's the thing. I mean, all these tariffs are out there, and they're very big numbers, but they're exclusive of almost 70% of the tariff, or rather the actual import-export pieces and the pieces that make up the puzzle, right?
Yeah.
If you have a look at all the technology, it's bar that.
Yeah.
If you have a look at all the, I can't remember, I think it was medical equipment as well, it's bar that.
It's a bit like free trade agreements, right?
Yeah.
Because the free trade agreements, you like as a consumer, as a punter watching the telly, let's say you're the US and I'm Australia, if we shake hands and go like, we're celebrating our free trade agreement, it's not like unadulterated trade back and forth. There's always little points. And the easiest way to understand it is we can't say champagne in Australia anymore, but they can in California. Why? Why? It's a part of the free trade agreement.
Probably.
Well, we can't call out. We're allowed to say it. Like, can I have a glass of fizzy, bubbly, nice, good, like make regret in morning? Yeah. We're allowed to say the word.
Later tonight?
Yeah, later tonight. But we can't market our sparkling wine as champagne.
Yeah.
I mean, I live not that far from a place that used to be called Peterson's Champagne House.
So California, sorry to interrupt, but California, I'm actually quite interested on this. Cali can actually call it champagne. Yeah. Where else in the States?
Don't know.
Why is that?
Maybe the whole states.
And is that a trade agreement with champagne?
Yeah, it's a trade agreement. Like, because it has to come from the Champagne region, and for those.
So France has said yes. That's essentially.
Yeah, because it's this massive market, right?
Wow.
And Trump has just was talking about Qatar Airlines has bought like 150 Boeing 777s.
Yeah.
There's always a 7.
Yeah.
And it's going to directly contribute to around about 1 million jobs in the US, right? So, like, you're not going to bung 145% tariff on that.
Take a little pinch of salt, though.
Yeah. They'll be on the phone to Boeing going, we're thinking about buying, some aircraft. And they're like, what, 1, 2? And they're like, 100. And they're like, shit, we better call Trump.
Yeah.
Because this isn't going to work. And he's going to want the clip of the ticket. It's like Boeing is an international business.
And that gets manufactured where?
In the States.
Oh, it is in the States?
Yeah.
I was hoping you were going to say China.
No.
Okay.
No, although there was an interesting artwork.
At least components of them?
Yeah, that's the thing. There was a meme about a Boeing aircraft that, like, the parts of a Boeing aircraft were made in America, and it was just like a nose and a wheel or something. Like, yeah, it's widgets, right?
Yeah.
Like, they can say, like, we're gonna like, you could think of American nationalists thinking this is really good for our economy because we're going to build our own stuff, don't buy it from overseas, but they're not building every tiny little widget. Yeah. Like the wheel of a thing probably needs to come from somewhere else, or the little spring that does the action, whatever. Like, I'm not an industrial designer.
But I mean, this is the thing with, I mean, a very good example of what you're talking about right now is Mac. Mac's, all of their products are pretty much exempt from the tariff law. So their whole factory and production is exempt. So anything that gets manufactured by Mac or Apple is exempt from the law.
Yeah.
But there are a lot of things that, and I think the impact that is going to lead on from all of this is going to be the point that where Trump starts to put tariffs on things that cannot come into the States, they will then jack up the prices in China to make account for the loss, which will then become more expensive to Australians who need to manufacture houses, which will then become more expensive. And now we've got another cost-effective impact on our housing impact.
It definitely could be. I think that the first thing that happens is inflation goes through the roof in the US, which has global ramifications. But, there's a few economists that are saying, well, the price of imported Chinese goods could plummet because there's no other market for it. Like, the US is one of the biggest, probably the biggest Chinese market, right? So there's this surplus of products, and like, you can raise the price, but when you've got so much supply, you sort of, like, the only way is down, right? Like, you need that sold. Like,
there's other countries as well, like close to China, Vietnam, and they are doing a lot of production as well. And I think China's actually made themselves very much aware of this potentially becoming an issue because their new Trump's day would one day come back.
Yes.
If you remember 2018, Trump did put tariffs in place on his election then.
Right.
And that was the first impact.
Right.
It wasn't as felt as what it is today,
Yeah.
but I think that was probably the effect of COVID shadowing it. And, the impact was, the announcement was made in 2018, and then COVID came in 2019, and then that wasn't important
supply
anymore.
Chain broke anyway.
Yeah, so it wasn't really important anymore. It got lifted.
Yeah.
I believe it got lifted. And then COVID came, got shadowed, and now we're back into this again. And I think that they knew the day would come. And so they have actually been moving the manufacturing over to Vietnam, pockets of it. However, there's still tariffs in Vietnam too.
Yeah. Have you seen, there's a little clip from Ferris Bueller, which sounds niche, where it explains like US putting tariffs on other countries?
No.
And then the teacher's like, anyone, and what happened to prices? Anybody, the prices rose. And it actually explains what the impact of tariffs would be under Trump so perfectly. I have to send it to you.
Yeah, do that.
It was actually sent to me by a behavioral economist.
I was going to say I'm out of the pop culture, but I also know economists aren't in the pop culture.
No, he probably, Ferris Bueller might have been the last movie you watched.
Right, yeah. Cool. Let's talk about the data that you collect and that you make available to all of your audience, whoever wants to sign up and sign up to your newsletters. What sort of information can these guys get receiving in the last edition that you guys have delivered?
Yeah, well, so what we really did from the beginning of starting our business is that there were competitors of ours that were saying, like, on average, we get between $5,000 and $10,000 worth of deductions. And I sort of said, well, that's not an average, that's a range for a start. And if we get the average, what is it, right? And there was no answer to that. So when we started, I started collecting it from the first appreciation schedule that we did. Now, of course, you need more than one to give some statistically significant data.
3 is right?
3 is fine.
3 is good. 3 is very strong.
Yeah.
Cool. Average of 3.
Average of 3. So we didn't just collect that data point, we collected every data point that we really got. I mean, it's every question that we ask an investor is because it helps us to do our job.
Yeah.
Apart from things like where they live, that's just how we're addressing it.
Sure.
But even where they live becomes an interesting data point because we can see how far they bought an investment property from where they live. So it all sort of started with our data, and I was really bent that way and really interested, and I found that's a good way to get media attention is to share insights, especially insights that didn't exist elsewhere. So, for example, CoreLogic have never published the percentage of people that live in their property before it becomes an investment property. But we were capturing that because you can't claim deductions for the time it's a principal place of residence. So we found at the time, and it hovers between 23 and 25%, but it's like 23% of investors lived in their investment property before they rented out, way higher than what I would have expected.
I would imagine that number would range drastically from capital city to regional.
I don't have that off the top of my head.
At least maybe in the last couple of years.
Yeah.
Because, regional investing has become far more palatable to a lot of
I'll do an
investors.
update for you.
I'd love to know those numbers.
That's a good way to weasel my way back on the show.
There you go. Watch the space.
Yeah. So then in the last probably 6 months, we've gone from just talking about our data to saying, well, what's happening in the property market that could be of interest? It's of interest to our clients. Obviously, it's a way to get my face on the telly sometimes.
The depreciator.
The depreciator. They don't call me that, even though I beg them. So the one I think that you were referring to was the MCG index. So we looked at the month of February and all of the transactions that within 6 months went onto the rental pool. So
this is national data?
National data.
And this is your pool or the national sales
national
data?
pool, yeah.
Interesting.
So not just our data.
Okay, wow.
We had our own data. So we had our data of the top SA3 locations in 2024, and I'll share that with you. But we looked at the top 20 regions for investing for whatever reason, because sometimes it's a bit perverted. Like it might be, I'm only buying that.
Good choice of words.
Yeah, I know. Just make sure everyone's paying attention.
Let's keep us on our toes.
Sometimes people will buy something with the intention that that's going to be their forever home, but they rent it out for a little bit. Whereas normally our data is a little bit kind of pure. It's more like this is
less perverted.
Less perverted,
yes,
if you want to say.
Lovely.
Yeah. So we like to keep the perversion outside the office, keep it clean.
At least between 9 and 5.
Yeah, between 9 to 5. So I can share with you the top 20
let's do that.
for that actual research project. So the number one was actually Melbourne Melbourne West, which is not a huge surprise because Melbourne's had a lot of eyeballs in the last little while. The property investment forums are all talking about Melbourne. For some good reasons, for some really unsophisticated reasons like mean reversion. So we actually did another research report and we said, okay, well, if Melbourne did, let's just say 5% per year of growth for 30 years, let's look at the moment when the market sort of plummeted or it didn't grow. And it didn't grow for sort of like 5 years. Well, where would the suburbs actually be? And what is the gap between what that suburb would have been and what it is actually now? That's a different research report. So Melbourne West was number one. Then we had Gold Coast, Perth Southeast, Melbourne Southeast, Melbourne Inner, Perth Southwest, Melbourne Northeast. You know, you got to go a fair way down till you get to Adelaide. Then there's a little bit of regional stuff. And that kind of, in some ways, correlates with our own data for 2024, which actually had Townsville as the number one and Perth. So it was really Queensland and Perth. And if you look at the last maybe 2 to 3 years, Queensland and I say Queensland and Perth, like Perth is a state. But the reason why I do that is because roughly 75% of the West Australian population is in Perth. It's quite weird like that. Queensland and WA were kind of fighting side by side for where the highest percentage of investors in our data were going.
Right, okay.
Yeah, so Queensland at last count was beating Perth, and I expect that trend to happen because Perth was nothing. Like Q1 2021, it was about 9% of what we did. You fast forward to Q1 2022, and it was
drastically higher.
Yeah, it was over 20%.
Yeah. I think that's when we got in, was in mid 2020, I think it was.
Right.
And that's what we saw. Just the consumer confidence just skyrocketed. And it comes into the affordability situation, you know. And it's one of the biggest factors for a market to be, or rather for the market to have the possibility to grow. Because you can't say that that's the reason it's going to grow, because there are a lot of affordable areas that don't grow.
But one thing I think people don't always understand is it's affordable relative to the incomes of the location.
Correct.
Yeah, which I know you understand. But that I think is missed from the conversation sometimes, because even though Perth has had this massive run, I did like 19% last calendar year and I think about 24 the one before, it's still like the wages to asset price ratio is still okay.
It's still not bad.
It's not that bad.
We actually did a run of our data about 2-3 weeks ago, and I'm surprised. Like it actually, it has legs to still carry on going. I think though that the difference there is that it is such a removed location, and what halted it back in 2016 is when it started. Was it 2016 or 14 when it pretty much slowed down? Yeah,
it had basically 14 years of nil median growth.
So even longer than that then. Yeah. But back then, because it is a removed economy, it is self-sufficient somewhat on its own, and there's no real direct connection between any other state and territory, really. If you have a look at Victoria and northern Queensland, you draw a line straight up, you've got the Bruce that connects all the way through from the top to the bottom. The highway name changes, obviously, or the freeway name changes, but it goes through all of these different states, and there's a main area inside all of these states and these different hubs, which are basically these administrative headquarters. If you look at Victoria to New South Wales, you've got, I'm trying to think of the name. What is it?
The Hume?
No.
You're talking about the
Wodonga and Albury.
Wodonga,
If you look at the direct route from Victoria through to Queensland, you've got that freeway, and on the border of New South Wales and Victoria, you've got the administrative headquarters for Albury Wodonga. And those are very much markets that grew quite well in 2020. And again, it came down to the affordability side of things. And it is quite a regional market, but it comes down to the fact that there is a lot of things happening in these areas.
It's a big population
centre,
right? Like, because I grew up in country New South Wales, and it was about half an hour to Wagga and an hour to Albury. That was like the big smoke.
Yeah.
Like, I mean, there was Sydney. We knew about Sydney. We knew there was a Sydney. But yeah, Albury was like, if you need to go for a medical appointment or anything, you're going to Wagga or Albury. And there's lots of places like that around the country. Like Dubbo is a good example of sort of like the Central West. Like that's always a market that's done fairly well because it is like the central point of a lot of land mass.
Dubbo has done quite well recently as well. What are your feelings on it going forward? Any ideas?
I'm not a hot spotter. I couldn't answer
Confuse
that
me,
categorically. Yeah. It's an interesting place. Like I can't remember which side of the river it is, but there's one side of the river that you just don't go. That I was given very strict instructions not to leave valuables in the car. I think crime is a bit of an issue there.
Right.
But I think it will be a perennially good market for investors. It's got a relatively cheap price point, and it is a central hub for a lot of people. You know, it is
very much central. Administrative is massive there as well, because there's a lot of aero projects and rail delivery and freight delivery along those tracks, and they have to be administrated from somewhere.
Yeah, and you got the Royal Flying Doctors coming in and out of there. You know, Qantas are in there. Yeah.
Cool. What about your take on the construction that's been promised to us? Whereabout are we sitting on that?
Yeah, so that was the previous government that is now the new government for its extra term. And I think they're trying to reframe the narrative to say, all right, well, from 1 July this year, that's when the 1.2 million homes that we're going to build in 5 years starts. So it was actually 1 July last year. So we've basically failed on the first year. I think it was a weird kind of statement, press release for me, because it's the government sort of saying we're going to build 1.2 million homes. I'm like, well, you're not going to build anything.
Yeah.
Like developers are going to build it. And what do developers need? Well, they need certainty. They need
services, employment.
They need services. They need labour. They need materials. So we're coming off the back of roughly 40% growth in construction costs in a 2-year period, which is mad. I mean, someone like me has obviously looked through the building price indices all the way back through to Federation or as early as they go.
Idea, it's you.
Well, I mean, there's way cleverer people than me in that space, but, it was just fanciful to think that we could do it. We've only really built at that pace once ever, and we're trying to do it, and we're trying to do it at a time where interest rates are high. I mean, they were higher than they are now, but they're still, at a relatively high point of the cycle in modern terms. But we've got a huge labour shortage, and we've also, at that point in time, and it's probably weaning off now, a huge infrastructure pipeline, really in every state of the country. Like we've got Western Sydney Airport, like that's not a dodgy little grass runway, so that's a big thing. The Melbourne Metro Rail Loop, like I don't know how many billions that is worth. But
this is the problem. I mean, there's all these promises that they're going to be putting these properties down, and even if they do get the staffing, we've got such a bad logistical operation behind it. Because have you done a renovation on any of your places recently?
No. And
good luck trying to get it across the board with the council.
Yeah, right.
It takes forever.
Yeah.
Getting your plans approved.
Yeah.
I mean, obviously, if you're doing mass building projects, there's a way sleeker project than the investor trying to chuck a shit on his property. But, it's just there's so much red tape. And beyond employment and beyond the price of goods, the red tape is just miles long.
So, there's a lot of problems with new supply coming onto the market, and one of our research projects was called the NIMBY list, which Channel 7 picked up because it's quite emotive. It's like, there's a Karen saying we're not, it's not in my backyard, I'm not allowing that development. What we did is we looked at every suburb around the country, and we looked at suburbs that had less than 35% higher density dwellings. So, like it would exclude places like Piermont, which is all apartments, and you would say that's fairly well developed, right? Yeah. And looking at how many, what percentage of improvals there were on the 2021 census housing data stock, and really looking for anything that was kind of under 3%. So it was interesting. I had a few different journalists take different angles. Like one kind of said, so if you were looking at investing in property or you wanted to buy at a place where you knew there wasn't going to be much development, these would be good places to buy. I'm like, that wasn't the intention, but
Yeah.
one could do it that way.
But that's not the thing to look for, really.
No. We were basically, I mean, when Channel 7 did the story, they said MCG are pointing the finger at this council and that council, and I'm at home going, oh, no, not pointing the finger at anything. And then there were good reasons.
Yeah.
Some of them have got heritage overlays and it's prohibitive. And heritage overlays can be a good thing. Like we can agree there are some beautiful parts of Australia that we don't want to turn into high-rises.
Absolutely.
So I wasn't pointing the finger. No. But I was just giving the data so that we could kind of unpack, okay, well, there's tightness here and let's see why. Is there a legitimate reason or is it a problem with the not in my backyard interest groups?
Yep.
But it's a way bigger issue than NIMBYism. There's the planning stuff, right? There's the red tape, the taxes that go with new construction
costs.
Yeah, and the HIA sort of said that can be
frames.
like half of a new build could actually be in taxes. You know, like there's a million different impediments to supply.
And I mean, just dialing back in the Trump idea with it all as well, a lot of that sort of cladding and a lot of material goods comes from China, which could potentially also go up.
Yes.
Which is going to slow things down too.
Well, hopefully it goes down for us.
Yeah.
You know, and
do you think it could?
It could do.
How would that happen?
Well, like the tariff is between the US and China. It's kind of outside of us if we're not dealing with the US.
Oh,
so if the China are looking for a market for their building materials,
make it more attractive to us.
Yeah,
it's a good concept. Yeah, I get that.
Yeah, we're not a big market, right?
No.
Our population is.
But if they did that to the rest of the global economy as well, then potentially they could save themselves a bit.
Yeah.
Let's hope they go that way rather than raising to make for the shortfall.
Yeah. Well, I mean, the only way you can actually raise prices is if people are still wanting to buy it and ideally fighting each other to buy it. Yeah. But if America's off the table, I mean, that leaves a big chunk of the earth. I mean, you ask any American, it's basically America and then there's, I don't know, a couple of piddly countries around the outside or something. But I mean, it is a big economy and it's a developed economy, whereas you've got, you know, places like India that's got a way bigger population, but wouldn't be the same in terms of demand for construction materials, I would be guessing.
But also, India's got a massive construction area already where they do a lot of their own sort of development and construction.
Well, the price of labour is a lot cheaper, right?
Yeah. So it makes sense for India to keep it inside India, though.
Yes, yeah. The only way I think the Trump sort of tariff plan and building all of the manufacturing in the states itself kind of works is if it's automation. And that's maybe where the Musks of the world come in. Yeah. I mean, I can't imagine you being a Musk and throwing, you know, hundreds of millions of dollars at a campaign if there wasn't something in it for you.
Yeah, questions are raised, aren't they?
He's obviously one of your mates with his dodgy accent. But, you know, there was a time where I kind of thought, like, the world is better off to have a Musk in it because of the visions and the environmental stuff that he's done with the solar tiles, you know, the electric vehicles, or that's up for debate.
Satellites
with the
in
rare
the sky, what's it called? The Starlink.
Starlink.
I mean, there's so many countries now that have access to internet because of him.
Yeah.
You know?
Yeah, exactly. But he's a bit troubling as well.
He's troubling.
Yeah, we'll keep an eye on him.
That wraps up another episode of the Lazy Equity Podcast. Tune in next week to hear part 2 of our conversation with Mike Mortlock. Don't forget to like and subscribe to hear the latest episodes.